Welcome to The Explainer. Today, we're taking a trip back in time, and then we're rocketing straight into the future of our digital wallets. So I want you to close your eyes for a second and just picture the early days of the internet. The year is 1998. You can practically hear that iconic hiss and screech of a dial-up modem, right? E-commerce was in its absolute infancy. It was a total Wild West. And the biggest barrier to buying things online back then actually wasn't the clunky technology or those agonizingly slow speeds. It was a complete and utter lack of trust. I mean, imagine trying to buy a rare collectible, like, say, a vintage Beanie Baby, from a total stranger on some early message board. You either had to mail a physical paper check across the country and just pray they actually sent the item, or you had to type your most sensitive credit card numbers directly into this unencrypted digital void. People were terrified. And out of that massive friction and fear, a giant was born.
Which brings us to a huge question. Who actually controls your digital wallet? For a really, really long time, the answer to that question was universally, unquestionably, PayPal. They were the absolute pioneering king of online payments, just the undisputed champion of early e-commerce. But today, well, that king is facing an all-out siege. And this isn't just some minor business rivalry. We're talking about a multi-trillion-dollar war for the future of money fought against modern tech titans who want to control literally every single aspect of your financial life.
So, here's our battle plan for unpacking this massive shift today. We're going to cover 1. The pioneer of trust. 2. The two-sided network. 3. The squeeze play. 4. Building a super app. And finally, 5. Evolution or obsolescence. Let's get into it. Part 1. The pioneer of trust. Let's look at how PayPal originally positioned itself to become this absolutely vital bridge between millions of deeply wary buyers and sellers.
Think back to that incredible anxiety of buying something from a stranger in 1999. Handing your financial data over to a random website felt like a massive gamble. It was a leap of faith that most people simply wouldn't take. But then came this brilliant solution, the security of the PayPal Shield. For PayPal, you see, trust wasn't just some clever marketing gimmick. It was their actual core product. They essentially commoditized peace of mind. By heavily tying themselves to the booming auction site eBay, they provided a safe intermediary. Through their buyer and seller protection programs, if your item didn't show up, hey, PayPal had your back. They absorbed the risk of the transaction. And that is exactly why users overwhelmingly started actively searching for that comforting, familiar yellow PayPal button at checkout.
All right, moving on to part 2, the two-sided network. This is how they built the moat.
That early trust allowed them to build something incredible over 2 solid decades. The real secret to their total dominance actually comes down to the network effect. So what is that? It's a closed-loop business strategy where a platform becomes increasingly valuable as more users join, both sides. This isn't just some dry economic theory, folks. This is the secret weapon of modern tech monopolies. It's literally the absolute holy grail of platform economics. Because once it gets spinning, it creates a fortress that is nearly impossible for competitors to breach. So here's how it works in practice. You have 2 distinct sides, consumers and merchants, and they are constantly at odds. Consumers want to use their digital wallet everywhere, right? They won't sign up unless every store accepts it. Merchants, on the other hand, absolutely will not bother to spend the time and money integrating a new payment method unless millions of consumers are already banging down their door demanding to use it. It's a brutal chicken and egg problem. But PayPal solved this beautifully. By piggybacking on eBay, they simultaneously captured buyers who needed a way to pay for auctions and sellers who needed a way to accept that cash. Remember when they famously gave away $10 in pure cash to anyone who signed up and referred a friend? That was brilliant. By aggressively capturing both sides at once, they created a massive self-reinforcing loop. You need merchants so consumers use it, and you need millions of consumers so merchants feel absolutely forced to offer it at checkout. Part 3, the squeeze play. Let's shift gears and look at the new threats currently attacking the incumbent king.
The barbarians are officially at the gates, and man, they are formidable. Introduce yourself to the first massive threat, Apple Pay and Google Pay. Now, these aren't just other payment websites you navigate to. These are OS-level wallets with a deeply, deeply unfair advantage. I mean, Apple and Google literally manufacture the glass and steel you carry in your pocket every single minute of the day. They control the entire ecosystem, from the silicon on up. Just think about it. When you use Apple Pay, a quick glance at your screen triggers Face ID, instantly authenticating a seamless one-tap checkout. Boom! Done. Traditional third-party checkout buttons, well, they require multiple steps, redirects to new browser windows, remembering passwords. And in the hyper-competitive world of e-commerce,
Every single extra second of friction literally kills a sale. Hardware integration makes the checkout process fundamentally faster and smoother than what any traditional third-party software could ever dream of offering. And then there's Stripe. They're essentially the back-end ninja of the internet. So while Apple and Google aggressively attack the consumer experience on your phone, Stripe is quietly dismantling PayPal's grip on the merchant side. They've completely revolutionized digital infrastructure, making it utterly effortless for businesses to accept payments natively, directly integrated right into their own beautiful site designs. The customer never even has to leave the merchant's website. Payment becomes completely invisible. So suddenly, that bright, recognizable, branded PayPal checkout button is no longer the only or even the easiest way for a new merchant to set up shop.
This two-sided attack leads to a really painful consequence, the declining take rate. Let's define take rate for a quick second. It's the tiny, fractional slice of the overall transaction fee that a payment processor actually gets to keep as pure revenue. As Apple, Google, and Stripe squeeze PayPal fiercely from both directions, that tiny slice is getting razor thin. It puts immense pressure on PayPal's profit margins. To survive this brutal margin squeeze, PayPal is being forced to rely heavily on their higher margin, unbranded enterprise services, like their Braintree platform, while keeping their operational costs incredibly lean just to stay in the fight.
Part 4. Building a super app. Here comes the counteroffensive. PayPal is definitely not taking this lying down. They realize they have to reinvent their legacy, and it all started with an absolute masterstroke of an acquisition, Venmo. With Venmo, they successfully transitioned from being a sterile financial utility into a social verb. Think about the stark difference between logging into a traditional, boring banking app versus opening Venmo. Venmo completely captured a younger demographic by turning peer-to-peer payments into a social network. Splitting a pizza bill or paying a roommate for rent suddenly came with this scrolling social feed full of inside jokes and emojis. Just think about how often you say, "Hey, just Venmo me." That cultural footprint gave PayPal massive dominance in our everyday interpersonal interactions.
But here's the thing, Venmo alone isn't enough to fight off hardware giants like Apple. So how does a legacy player truly fight back against companies that own the actual smartphones we use? The answer is the ultimate defensive maneuver: building a walled garden of their own.
PayPal is rapidly deploying what you could call a super app arsenal. They're pushing far, far beyond just being a button you click once a week for an online purchase. They are integrating buy now, pay later capabilities to fend off competitors like Klarna. They're allowing cryptocurrency trading, launching high-yield savings accounts, and embedding shopping rewards. The strategy here is extreme user stickiness. By bundling all of these diverse financial services together into one single, massive ecosystem, they're trying to ensure that once you open the PayPal app to check your balance, you can invest, save, and shop without ever needing to retreat back to your traditional bank.
Part 5. Evolution or obsolescence. Let's look at what this all means.
So, what are the vital rules of platform strategy we can learn from this high-stakes war? Well, lesson number 1 is the fragility of network effects. As we've seen, a platform is only ever as strong as its network. Think about social media platforms you've abandoned the absolute second your friends stop posting there. Payments are exactly the same. If PayPal starts bleeding either merchants or consumers to their competitors, it triggers a catastrophic death spiral. Both sides of that very delicate scale have to be kept perfectly balanced and highly engaged.
Lesson number 2, speed is the new trust. Back in the 90s, trust meant heavy security and highly visible buyer protection shields. But today, in the mobile era, trust is completely assumed. Speed is the only differentiator that really matters now. A perfectly secure 5-click system is always going to lose to a perfectly secure 1-click system. Friction is the absolute enemy.
In our final lesson, disrupt yourself. PayPal fundamentally changed the world of money, but right now they are at a massive crossroads. The brilliant company that destroyed the friction of using credit cards in the 1990s is now fighting desperately to make sure their traditional checkout button doesn't become the friction of the 2020s. You have to be willing to tear down your own incredibly successful legacy model to build the next one before someone else does it for you. So, can the king of online payments hold off the giants of tech? The world of money is shifting right under our feet as we speak, and the stakes are in the trillions. Will PayPal successfully evolve into a completely indispensable all-in-one financial ecosystem, or will it slowly fade into obsolescence as hardware-level wallets effortlessly take over our phones? It's a truly fascinating battle, and I highly encourage you to watch closely as these platforms fight for absolute control of your digital wallet. Thanks so much for joining me for this explainer, and remember to keep questioning the technology you use